Welcome back, investors, to Ticker Time News. I'm Adam. Sorry I missed you yesterday, but hopefully that note that I sent out late last night helped to provide some perspective on the bigger picture of this market and how the Fed could just mess this whole thing up. So hopefully you had time to read through that and understand the bigger picture. And you can get that by clicking on the first link in the description. I thought it laid out a perfect plan for how the market's going to go in this short to maybe midterm type of deal, maybe through December, maybe a little bit longer. So again, I hope you found that very helpful indeed to provide to your own investment thesis. Now, the stock market today, it tried to rebound, but it ran into resistance from sellers when the S&P 500 broke below Tuesday's low, which was 39.21, and a very key resistance, or I should say support, not resistance, a very key support level. If you look on the screen here, this is the S&P 500. It is SPX is the ticker. This is the daily time frame, right? If we go back here, just above my head here, when we hit the June lows, remember those way back here? Well, a trend line started when we got to the middle of July. A month later, this trend line held as support. Now, for a solid trend line, you need 3 or more points of contact. Well, at this point in time, we only had 2. So we started to have what could be a support line for potentially, for those in the camp that we're in a new bull cycle, right? This would be a very key area for you. And then here we go. We get to the beginning of September. We come down, we test it, we find support, and there's an immediate rally off of that support line. But ladies and gentlemen, yesterday it closed just above that. Today it has broken below it, and now we are sitting just a hair over 3,900, and that would be 390 on the SPY. If this gets broken, 3,900, if this is broken and we close below it, expect immediate pain. All right. Now, I know that the bullish out there and the bearish out there at this moment in time want a rally off of this low. Well, why would bears want a rally off of this 3,900 low? Well, because the bears, they want to add to their position. And if we get a nice little bounce, well, then the bears could add to their position to make the fall even sweeter for those who are on the bearish camp. And I am in the bearish camp. I believe that there is more pain to come in this market. Now, this trend line being broke today is significant because it acted as support recently, okay? And I mean recently as just yesterday on Wednesday. It also acted as support on Tuesday. So twice this week, that trend line acted as support. Today, breaking below that is significant, but it does not mean a bounce cannot occur. As a matter of fact, if we pull up and look at the RSI down here, it was rising. It took a dramatic turn when CPI came out and started to fall. And you can see that with this highlighter following the line up, CPI, and then boom, it starts to break down. Now, it's only out of 42, so it's not in that oversold place yet. The market could still go lower, right? The technicals are saying that the market can still go lower, and tomorrow's Friday, right? Being an expiration date as well, well, there could be some added volatility tomorrow because of that. But let's keep going down. We'll look at the 5-minute of this as well. And just real quick, the SPY today down 1.1%. The Qs down 1.6%. The IWM down 0.7%. So big caps, they didn't do so well today. small caps actually performed better. Now, the major indices, they swung around a fairly narrow range. Let's look at the 5-minute here on the S&P 500. Let's adjust this. The purple blob there marking 3,900. Wow, it's really creeped in there. All right, let's open this up a little bit here so we can see. We started this morning with a gap down, but an immediate, once the market opened, an immediate bounce back above where we had closed yesterday. But then, man, we just seesawed around. The overall trend, though, was down for the day. And it seemed like once we reached this peak right here at about 1:30 p.m. Eastern, that's where it just sank. And it just aggressively started to sell off pretty good there. All right, so that's the 5-minute. A pretty narrow trading range. If you look at today's high versus today's low, let me pull this up here. Looking on the right-hand side of your screen, you can see we got as low as 38.88 and as high as 39.59. So just over 100 point, actually not even the 100-point swing there, even though on the 5-minute time frame, it looks like it was more so, right? It looks like there was quite a bit of volatility. And there was, just the trading range was pretty narrow. All right, let's clean this chart up. Now, this afternoon, the trading range being narrow, okay? That was until this afternoon. The S&P 500 fell below the 3,900 level. And remember, it got as low as 38.88. It found last-minute support from buyers, closing just above the 3,900 level at 39.01. 1 point. 1 point above that 3,900 level. And you know how important. Let me change this to a 15-minute time frame. And let's go back just a little bit. Go back a little bit further. You know how important that 3,900 level is. If we go back here, just above my head on the screen, right here, we held that 3,900. Can we hold the 3,900 again? If we do, then we could see a bounce from here. If we do not hold this 3,900 level, we will fall further, okay? Now, it wasn't just the S&P 500 getting hit today, but the Qs as well. The Nasdaq Composite, it lagged the other indices as mega cap stocks. They didn't do so well today. Their performance was bad, and that's what pulled the market down further. Looking at a 15-minute time frame here on the Qs, which was down the biggest today outside of Ethereum. And I do want to talk about Ethereum too, because we called this out a couple days ago. Here's the Qs, 15-minute time frame. We get the big drop down here from CPI, and then from that drop down, the trend here has been moving lower and lower and lower for the Qs. But now it is at this point at 280. Let's see here. 289, 288. That is, well, that should be support, but look at this. Look at this. This is a bad sign for big caps, for mega cap growth, for the Nasdaq. Look at the Qs. Let me open this up here to show you. This is bad news right here. Let me pull it up a little bit. I need to pull it up so you can see. All right. The Qs closed today at this line right here at 291. Down 1.67%. But in the after hours, the Qs are now down here at 288. The Qs have dropped another 0.7% in the after hours. That's not a good sign. That's not what you want to see, okay? Just pointing that out there real quick. All right, let's clean this up here a little bit. And then I'm going to go to the SPY. And I want to point something out on the SPY as well. There we go. All right, let's go to the SPY here. Down 1.14%. It closed at 390. And remember, I told you, 390 is the key level for the SPY. The SPY is down another 0.6% in the after hours. It's at 387. This is not good news. The SPY closed up here. It is now trading down here. It did not hold that 390 line. There was a lot of cheer happening at the closing bell that, oh baby, we were able to hold 390. We were able to hold 3,900 for the SPY, for the S&P 500, SPX. But in the after hours, it has fallen below that. Are we going to wake up tomorrow with a giant gap down? Or is this 0.5%, over 0.5% fall here in the after hours? Is that just some leftover sell orders that got triggered, or trailing stop losses that got triggered, being that we close right at that 390 level? That could be a possibility. So a couple things that I want to point out here. I'm going to go to the daily view here on the SPY, and I want to make it as clear as I can. For the SPY, the lower end of the weekly expected move is 396. 396. We are about $9 below that right now. Tomorrow, if this fall in the after hours continues tomorrow, then it'll be 4 weeks in a row that the weekly expected moves have not held up. And that shows you that volatility is in the air. Now, there was a mix of economic data and corporate news ahead of the open today that was met with mixed reactions from market participants before weakness in the mega cap stocks took over and pulled the main were the main pull on price action today. The Vanguard Mega Cap Growth ETF, ticker symbol MGK, it closed down 1.7%. That's my gauge on mega cap growth right there. And you compare that to the 1.1% loss in the S&P 500. So mega caps did not do very well. As a matter of fact, let's see. MGK is that ticker symbol. Let's see what they're doing in the after hours here. Not much. Not much. Seems to be holding still. Holding steady. Okay. Right now, the bottom end of the weekly expected move is 195. It closed at 190. Mega caps have just they gave up today. And they did not help the market. And we know that for the majority of 2022, mega cap growth stocks, your Apples, your Microsofts, your Alphabets, etc., they have been the directional driver of this market. Now, many stocks were under pressure today. 9 of the 11 S&P 500 sectors closed in the red. Let's pull up those sectors here and take a look. Now, I've got a theory on the dollar. I want to talk about the dollar too, and Ethereum. But Ethereum is down nearly 10%. And that's something we talked about, that once this merger was complete, there would be a sell the news mentality. And that's partially what's caused Ethereum to drop as much as it has. But I'll talk about that in just a moment. Okay, if we look at on the right-hand side of your screen here, the 11 S&P 500 sectors, the majority of them are in red. In red. Only healthcare, XLV, was up 0.6%. There was relative strength in many aspects of healthcare today. And healthcare is a defensive sector like the utilities are. And then we had financials, ticker symbol XLF, up 0.3%. Those two were able to squeeze out a gain. While energy, XLE, down 2.5%. Utilities, XLU, down 2.5%. Those two are not the same. Energy and utilities? No. Utilities is defensive. This shows you that market participants are confused on what to do in this market. And I don't blame them. This is a really hard market to trade in. And then information technology, XLK, down 2.4%, and that brought up the rear. Now, healthcare, it sat atop the leaderboard thanks to Humana. Ticker symbol is HUM for Humana. It was up a whopping 8.4% today, which traded up after raising its fiscal year 22 EPS guidance. Now, there will be some companies that will be able to raise their EPS and raise their revenue guidance, but the majority will not. And the note that we sent out to our investor community last night, it talked about that. Earnings guidance is too high, and it will need to come down, and that'll drag the market. That'll drag the market down when that occurs. Now, I don't want to sound overly bearish. I'm just trying to be realistic. Oh my gosh. Getting tongue-tied here on these live streams. I'm just trying to be real about it. Okay? All right. Technology was weighed down by Adobe. Ticker symbol is ADBE. Adobe lost 16.8% today. 16.8%. A huge drop. And it was starting to base out here after participants reacted negatively to the company's $20 billion cash and stock option acquisition of Figma. $20 billion Adobe is spending right now. Investors are telling Adobe, no, this is not the right time to be spending $20 billion. So the stock fell today. That helped to drag down technology. Now, energy stocks, they sold off as energy complex prices fell. Let's start with crude oil. U.S. oil. Easy ticker to remember on TradingView. There is a link in the description if you would like to chart right along with us at home. Oil today was down 3.9%. Back down to $85 a barrel. It is now sub $85 a barrel in the after hours. It seems like in the after hours, everything is continuing to fall, which isn't very good for tomorrow. Natural gas, that fell 8.6% today. These moves are being attributed to the news that a national railroad worker strike has been averted and will no longer take place. Let's talk about treasury yields. Okay, let's go to the 2-year. US 02Y, it is still inverted with the 10-year, but the 2-year rose 11 basis points to 3.87%. It is just unstoppable right now. Unstoppable. And if the Fed comes out and raises rates next week, 75 basis points is what it seems like it's going to do. Do you think the 2-year is going to stop? Probably not. This thing is looking like it wants to go to 4%. Can you imagine that? A 2-year at 4%? Well, the 10-year today, it rose itself, but not 11 basis points, only 5. US 10Y for the 10-year. It rose 5 basis points to close out the day at 3.46%. It is on that trend line. It is on that trajectory to continue to rise. And it is really, really wants to take out that high that was set on June 14th. And today, the 10-year was 0.1% from taking that high out. That's how close it was. 3.47 is the high from June 14th, which marked the low in the market. And remember, like I said, the 10-year closed at 3.46. It's 0.1% away from the June 14 high on the 10-year. And it's just trucking along. Wants to keep going. Now, some of that economic data this morning that affected the treasury market, the equity market, the crypto market, was the retail sales report. And if we look here, I want to pull up the retail subsector here. And you can see there was some strength here today. It was up 0.3%. I'll pull it back up a little so we can see that. Up 0.3%. It's left a big gap down on CPI, just like everything did. But the August retail sales came in at 0.3%. versus an expectation of 0%. That's right. Expectation was 0, flat. Not up, not down. So this was a positive for retail. And that's why the retail ETF, ticker symbol is XRT, it showed some relative strength today, being up 0.3%. Just like retail sales were up 0.3%. And then if you look at the August retail sales, if you take out autos, that was a little different story. That was down 0.3% versus an expectation of 0%. So the takeaway here is that the low level of, let me get my thought back. The low level of automobile sales. We talked about this a couple live streams ago when I said that for GM specifically, looking at the Camaro, there were customers who purchased a 2022 brand new Camaro ordered from the factory. Well, the factory canceled that order because they were not able to get the parts to build it. So they made the customer then go back in and buy a 2023 version, which had an increase in prices. So if you're looking for a new vehicle and you get cut because, well, the automaker can't get the parts, they're not going to make them anymore, and then they try to put you into the next model year at a higher cost, what are you going to do? Are you going to accept that? Or maybe are you just going to, find something that is already built? Probably find something that's already built, unless it's really, really special, right? So that's a reason why autos fell. Okay, and let's keep moving on with this. Now, I want to talk about just real quick the initial claims, jobless claims. It came in at 213,000. The expectation was 233,000. The key takeaway here is that the low level of initial claims, which is a leading indicator, it indicates a tight labor market that will keep the pressure on the Fed to follow through with another aggressive rate hike. So getting a 75 basis point rate hike next week on the 21st seems awfully likely. I mean, the Fed Watch tool, it's cooled off a little bit on that 100 basis point rate hike after the CPI report, and it's put most of it now into the 75 basis point rate hike. So I guess that's what the market is trying to do. With the market coming down today, it must be trying to price in a 75 basis point rate hike next week on the 21st. But that 3,900 level is just too important. It is very important. If that gets broken, like I said at the beginning, then that could lead to a cascading event of all the other indices cooling off and falling. All right. I said I want to talk about crypto, so let's talk about crypto. We'll look at Bitcoin and Ethereum, but I'm going to start with Ethereum. It's down 9.5% right now. We talked about earlier the sell the news a couple live streams ago. Sell the news on Ethereum that once the merger is complete, then there would be a rush to the door to sell. And that's exactly what we're seeing. But that's not the only reason for why Ethereum's down 9.5%. The economy. What happened with equities today? Specifically, what happened to the technology sector? Now, I know sometimes it's tough to admit, but crypto is linked to technology. At least that's how investors are trying to trade it. So when tech has a hard day, crypto has a hard day, and then vice versa. When tech has a good day, crypto has a good day. We also mentioned when talking about Bitcoin that Bitcoin, in the theoretical space, Bitcoin should be a hedge against inflation. When inflation goes up, Bitcoin should go up too, in theory. But I think that's just, we're so early to the party when it comes to crypto that link just isn't there yet, right? All right. Well, Bitcoin is at least holding its base here. It's at 19,790. I bought some a couple days ago, about 20,200. It's even sweeter now, but I'm waiting to see how much further it could potentially drop here. If it gets down to 18, definitely pulling the trigger. Even at this point right here, it's good to add. And like I said a few live streams ago, whenever Bitcoin gets below 20,000, that's when you dollar cost average your way in. Under 20, buy 10 bucks, $5. Buy 100, 500, 1,000. Whatever is comfortable to you. That's what I do. Under 1,000, under 20,000, that's a good place to buy. At least technically on the chart, that's what is being signaled. When it gets to that 19,000, 18,000 area, that's typically when the bounces come in. All right. Looking ahead to tomorrow, for tomorrow's market. Market participants will receive the University of Michigan Consumer Sentiment Preliminary September reading. The expectation is actually an improvement, 60 points. The prior reading was 58.2. So do you think that consumer spirits have been lifted with their expectations? If so, expectation will get met. If not, we won't meet expectation. And if it goes below 58.2, then that's worse than a month ago. But remember, this is the preliminary reading, so they don't have all their data nailed down tight. That comes out at 10 a.m. Eastern. And that's really the biggest thing to watch for tomorrow at 10 o'clock Eastern. Okay? All right. Well, I have reached the end of my notes. If you could do me a favor, please click that like button. Share this video with a friend. That greatly helps out a small channel like this. And if you like the perspective, you want deeper dives, weekly expected moves on 40 products, trade setups throughout the week, top 10 stocks list, then click the first link in the description of this video and join our investor community. We're here to help you along your investor journey, to help make you a better investor, a better trader. So click the first link in the description to start achieving your financial independence. And if it's your first time watching, click subscribe. Okay, ladies and gentlemen, thank you so very much for joining me today. I'll be back tomorrow after the market has closed to talk about what happened, why it happened, and what to expect moving forward. Now, since everything is so far away from the weekly expected move, remember for the SPX, that's 3970, okay? 3970, that is the lower expected move for the S&P 500 for this week. It is possible that if the 3900 level can be held tomorrow morning, then it is possible that we could slowly maybe start creeping back up to get a little bit closer to that weekly expected move. Do I expect a huge bounce? Well, volume has been elevated this week. If volume remains elevated, I don't think we'll get a bounce all the way back up to 3970, but it's possible that if volume comes in, it's possible that we could. But I think it all depends on whether or not the S&P 500 can hold 3,900. If it dips below that, then expect more pain and expect this market to go lower. All right. Thank you, ladies and gentlemen, for joining me today. I greatly appreciate your time. Remember those important key levels that we talked about for the SPX, for the SPY, for the Qs, for the IWM. Oh, one quick thing. I did want to look at the dollar. I forgot to do that. Let's pull the dollar up here real quick. The dollar has been strong. It is still in an uptrend. Okay? It's still in an uptrend. There is no reason this dollar cannot continue to go up. in my opinion, this dollar can continue to rise, and as it continues to rise, that's going to continue to put pressure on equities, on the S&P 500. There is an inverse correlation between the dollar and the S&P 500. When the dollar is strong, the S&P is weak. If this dollar goes up and has a blow-off top to kind of cap off this bullish move that it has made in 2022, then that would cause capitulation on the S&P 500 and cause it to fall rapidly. That's how I see this ending. The dollar's rise, I see it ending with a blow-off top. We have not seen that yet. All right, just wanted to add that in there real quick about the dollar, and I will sign off from here. Thank you. I greatly appreciate you for being here with me, and I'll see you tomorrow in the next video. Take care.